If you're considering investing in cryptocurrencies in 2026, this video will save you 10 minutes of research. Today, we're diving into the world of crypto wallets, essential tools for both new and experienced investors. With the rapid growth of digital assets, understanding how to securely store your cryptocurrencies is more important than ever. So, stick around as we break down the best wallets for beginners and how they can help you navigate this complex space safely and effectively. First, let's set the stage. According to a recent study, over 46 million Americans own cryptocurrency, with Bitcoin and Ethereum leading the pack. In fact, Bitcoin recently surged past $30,000, marking a 70% increase since January 2023. This surge has made cryptocurrencies more appealing than ever. However, with this potential comes the responsibility of storing your assets securely. Choosing the right wallet is crucial. Popular platforms like Coinbase and Kraken have made it easier to buy and sell crypto, but they also offer wallet solutions to keep your holdings safe. This matters for U.S. investors, especially given that states like California and Texas are seeing significant adoption of digital assets. Now, let's discuss the detailed impact of choosing the right crypto wallet. As a beginner, you might be overwhelmed by the options available. The three main types of wallets are hardware wallets, software wallets, and custodial wallets. Hardware wallets like Ledger Nano X or Trezor are physical devices that store your keys offline, providing an extra layer of security. They typically range from $60 to $200, which is a small price to pay for peace of mind. On the other hand, software wallets like Exodus or Coinbase Wallet are digital applications that allow you to store your crypto on your device. They are user-friendly and often free, but they are connected to the internet, which presents a higher risk of hacking. Lastly, custodial wallets, offered by exchanges like Coinbase and Kraken, manage your keys for you. This is convenient for beginners, but comes with the risk of losing access to your funds if the exchange faces issues. Let's take a closer look at how this plays out for a U.S. retail investor over the next week. If you decide to go with a hardware wallet, you might spend around $150 for a Ledger Nano X, which allows you to store multiple cryptocurrencies securely. This investment could save you from potential losses if there's a market downturn or a security breach. For example, if Bitcoin drops 20% from its recent high, having a hardware wallet can protect your assets from being stolen. Alternatively, if you choose a software wallet like Coinbase Wallet, you'll benefit from its seamless integration with the Coinbase exchange, allowing you to easily manage your assets. However, be aware that the convenience of software wallets comes with risks, such as potential phishing attacks. If you were to lose access to your software wallet due to a hack, the potential loss could easily reach thousands of dollars, depending on your holdings. Now, let's talk about alternatives and trade-offs in choosing a crypto wallet. You might consider using a multi-signature wallet, which requires multiple keys to authorize a transaction. This adds an extra layer of security but can be more complex to set up. Platforms like BitGo offer multi-signature wallets, which are great for those looking for enhanced security, but with fees that could be around 1% of the transaction amount. On the other hand, if you're looking for a wallet with robust customer support, Gemini Wallet is a solid choice. It offers strong security features and is backed by a reputable exchange. However, it might come with higher fees for trading compared to platforms like Kraken. Understanding these trade-offs is essential for making informed decisions that align with your investment strategy. So, what steps should you take this week to secure your crypto investments? Here's a quick action checklist. 1. Research wallet options : spend some time exploring different wallet types. Look into hardware wallets like Ledger or software wallets like Exodus, and assess which one fits your needs best. 2. Set a budget : determine how much you're willing to invest in a hardware wallet. A budget of $100, $200 is reasonable for a quality device that enhances your security. 3. Create your wallet : once you've selected a wallet, go ahead and create it. Follow the instructions carefully, especially during the recovery phase setup, as losing this can mean losing access to your crypto. 4. Transfer small amounts first: before transferring all your assets, send a small amount to your new wallet to ensure everything works correctly. This way, you can test the waters without risking too much. 5. Stay informed: subscribe to trusted crypto news sources to stay up to date on the latest security threats and wallet recommendations. Regularly check resources like CoinDesk or Crypto Slate for insights. 6. Engage with the community : participate in forums or social media groups focused on crypto. Engaging with others can help you learn from their experiences and stay informed about best practices. In summary, choosing the right crypto wallet is vital for beginners entering this exciting space. Remember, the security of your investments largely depends on the wallet you choose. As the crypto landscape continues to evolve, staying informed and making strategic choices will empower you to navigate it confidently. What wallet are you considering for your crypto journey? Share your thoughts in the comments below. The trend toward digital assets is just beginning, and the choices you make now could shape your financial future. If you found this helpful, subscribe to Bill Crypto USA and hit the notification bell so you never miss an update.